This phase does not just wipe accounts, it wipes beliefs as well. Let's compare bear markets. Let's look at Bitcoin and then take those findings and transfer them to the altcoin market. This is a long-term Bitcoin chart. It's on a logarithmic scale, so we can see what percentage changes happened in the early days versus recently. We can compare the bear market of 2014 and 2018 and 2022 to today's bear market. So let's just overlay the very first drawdown. If we were to see a bear market comparable to 2014, we could fall all the way down to 18K per BTC. Now, at the time, Bitcoin was of course much smaller in market cap, and so it's unlikely we're going to see the same kind of value destruction one more time. So let's compare the 2018 bear market to today. That's now the line in red. If history was to repeat itself, Bitcoin could go down to 21K. Let's look at the recent bear market, the one of 2022. Again, let's measure from top to the bear market bottom. That would indicate a turnaround at roughly 30K. So we can see with every bear market, the drawdowns tended to be a bit less severe. The pace at which we declined was comparable, but we did bottom out earlier. And so probably the 28-29K mark is a bit too pessimistic. Likely we're going to turn around earlier, maybe at 35, maybe even at 40K. Right now we are falling pretty much at the same pace as we always did. And it seems like this will continue for a while. There's very few people that bought and still hold Bitcoin at price levels below our current 70K mark. And that's what I think is very important here. Everybody looks at the current price relative to the purchase price. If the current price is above the purchase price, you might consider taking some profit. If the current price is below your purchase price, you might just wait it out. You wait until there is a recovery again. And so looking at potential psychological anchor points where actual trading volume occurred, I believe is important. But there hasn't been that much trading at any levels below our current 70K mark. Have a look at the realized profit to loss ratio. Are people currently on average realizing losses or realizing gains? Of course, the losses tend to be much lower than the gains. This is measured in BTC, and we are getting closer to realizing profits. We aren't there yet though, and this is where a bear market tends to bottom out. The average cost basis of the market is the realized price, and that's currently at 55K. Since that's below the current price, the market is still on average in net unrealized profit. There are still some market participants considering to take profit here. And that's why I don't think this is already the bottom of this bear market. We need to see maximum pain. I'd be very surprised if we were to substantially turn around from here. Bitcoin dominance continues to go up. So Bitcoin as a fraction of all of crypto appreciates quicker, or should I rather say depreciates slower. And here is the Ethereum dominance. How much of all of crypto is currently in ETH? And that continues to get sold off. I'm personally betting on a falling Ethereum price. Ethereum is even expensive relative to all the altcoins. This is the ETH market cap compared to total 3 ES. So it's the market cap of all of crypto except Bitcoin, Ethereum, and the stable coins. Ethereum still has negative momentum. A drop of 40% is very much possible. We are already below the equilibrium though. So the average ratio of the Ethereum market cap relative to total 3ES, that's the dotted line over here. So all of the future selling is just momentum. It's just the bearish sentiment, the negative narratives. Here is Ethereum relative to the smaller altcoins. So that's the altcoins that are not in the top 10. Ethereum could very much fall by another 33%. We have made money with the recent Ethereum decline, by the way. Another way to look at this is to compare the smaller altcoins relative to the bigger altcoins. So interestingly enough, there is a good chance that during the bear market, the very small altcoins continue to keep quite a bit of value. Yes, I do believe that all US dollar prices are likely going to go down, but the question is always about opportunity costs, right? What is the most risky asset right now? And I do think it's Ethereum. But let's have a look at this in a bit more detail. Let's have a look at the top 10 altcoins. If you believe that the top 10 altcoins are going to underperform the smaller altcoins, or that the smaller altcoins are going to outperform the top 10. Then what about the potential downside? This is XRP relative to the others market cap. And we did see much lower prices in the past. XRP in the worst case could drop by 78% from here. And that's relative to other altcoins. That's not just in US dollars. In US dollars, if the market is going down, XRP is likely going to go down more than those 78%. Here is BNB relative to the others market cap. BNB is doing relatively fine, but we are not yet close to the support. We could see, since recently there was quite a bit of a sell-off, an additional relative drop of 28%. Here is Solana dominance. Solana dominance is already very low. I do have my doubts though that this trading range will prevail. If we enter a true bear market, then Solana tends to be a levered bet on all of crypto and is likely going to sell off more. A top 10 altcoin that's holding up relatively well is Tron. Parts of this might be due to manipulation. Here is Dogecoin relative to the others market cap. The tops tend to decline, so do the bottoms. If we continue to see selling pressure, Doge could underperform the rest of the market by 49%. Here is Bitcoin Cash relative to the others market cap. It's actually surprisingly stable. And here is Cardano relative to the others market cap. The long-term trend is clearly bearish, but we are at a short-term support. So maybe we see a bit of a bounce until we then subsequently fall further. And so I personally navigate this market by looking for short opportunities. I want to bet on falling prices, especially falling prices of altcoins that have very high token inflation. When new tokens hit the market, where the early investors and the team, they cash out over time. Why buy this dip now, when historically bear markets have been way more severe and when still not many people are getting excited about buying the dip? It probably makes sense to at least wait for a few weeks and months and see whether or not we will consolidate. My base case is that from the current level, we could easily drop another 40%, potentially even 50%. That then, of course, has a levered effect on many altcoins as well. Now, I'm surprised how most people still don't understand how the macro defines everything. When Bitcoin is going down, then all the altcoins go down with it. And while you can try to pick individual altcoin that might be a winner, that's probably long-term a losing battle. And so really, figuring out where the macro is headed is the most important consideration. It doesn't matter what cryptocurrency it is. When Bitcoin drops by more than 80%, any portfolio gets crushed. And these kind of moves happen regularly. The last time was when Terra Luna and FTX went belly up, a drop of more than 77%. And so it's very clear that crypto moves in those trends. Some people even think that it's 4-year trends, right? 4-year cycles. This might become a self-fulfilling prophecy. I'm not willing to go that far, but there are clearly overarching trends, and I try to time them in a way. The very straightforward way is using moving averages, right? Here, for example, we've got the 200-day simple moving average in Bitcoin. We can bet on rising prices whenever the price is above. We can bet on falling prices whenever the price is below. And so that way we avoid quite a bit of the bear market. The question then becomes, what is the best moving average duration? Should we take the 200-day moving average, or should we potentially go shorter? Maybe it's the 175-day that's better. Maybe it's the 150-day that's better. What moving average duration historically worked the best? Should we maybe take just the 100-day? We're getting closer and closer to the price as we reduce the moving average duration. And it seems to have its advantages, right? We tend to enter a bit earlier when the moving average is shorter. But then we also get this random noise every now and then where you go above and below and above and below the moving average again. So I made a calculation to find out the best moving average for Bitcoin. There are 2 data points that are interesting. The one over here, the 44-day simple moving average. So on the x-axis is the moving average duration. On the y-axis is the annualized performance. The black line here is the comparison to just buying and holding Bitcoin. So the 44-day works pretty well. The 125-day also works pretty well. And so this is what happens when we use the 125-day simple moving average to bet on falling and on rising prices. Bitcoin is in white, the backtest is in turquoise. We can even optimize a bit of leverage, so we can go long with some additional risk, but then also additional return. And then this is our long-term outperformance. Every horizontal line here, that's a 10x. So this is a logarithmic chart. We move from this outperformance to this outperformance. So that's for the 125-day simple moving average. The 44-day works slightly better. So there are slight differences. If you don't want to trade too actively, just use the 125. If you want to optimize return, use the 44. Here's the 125-day simple moving average. Here's the 44-day simple moving average. And because trading according to that moving average is quite cumbersome, there's a lot of trading signals, I have created a capital pool to automatically execute those trades. And since we started that capital pool in October of 2025, we are making money, while Bitcoin, of course, went down. So that's the beauty of riding the trends. The outperformance can be massive. The last month's return annualized are 78%. The backtest indicates an outperformance versus Bitcoin of 115% per year. So this is a premium page of this channel of Bitcoin Strategy for automatic copy trading. It's all built on top of a decentralized finance protocol, a protocol that enables efficient trading and leverage and automatic copy trading. Hyperliquid is the largest so-called perpetual futures exchange. And I do think there is some security, at least in numbers. There's already 4.3 billion worth on the platform. And so our 3.5 million are just a drop in the bucket. The capital should be relatively safe. I think it's safer at least than if I was to personally hold the funds, right? All the funds are held by the platform and you can withdraw your capital at any point in time. There is no fixed lockup. And so instead of trying to find the few altcoins that might make money when the overall macro is bad, isn't it better to use approaches that historically worked very well? An approach based on statistics, an approach based on numbers. This is where I put my money and I'm very satisfied with the results. So if you want to co-invest in that strategy, feel free to check out Premium. It's currently $125 per month. You can simply sign up once, deploy your capital and then unsubscribe again. Of course, I hope that you will stay longer because besides copy trading, there's also a lot of tutorial videos that might be helpful for your long-term wealth building. But again, it's not required. If you just want to deploy your capital into the strategy, you can just get in, sign up, deposit your funds and exit again. A link to Premium pops up here on the screen. Looking very much forward to seeing you there. Thanks again for watching. See you next time on YouTube as well. Cheers.